Welcome to MP Access. My name is Gina Galusha. I'm the Executive Director at 5 Star and part of the Mortgage Point team. Today we're here with Walt Mullen. How are you today?
Good, Gina. How are you?
Good. We're so glad that you're here.
Happy to be here.
Glad you are. And you are with PHH.
Onity
Onity
Group. We can talk about that in a little bit too.
Yes. I would love to talk about that. I did a little bit of research, but I think it would be good for everyone to kind of hear what is that structure and what's it look like.
Sure.
Cool. Okay. So tell us a little bit about how you got where you are today. What's your background? What do you love about what you do? That sort of thing.
Sure. I don't think many people would say that career day in the 7th grade was let's talk about mortgages, right? But started out in financial services at GE Capital many moons ago in M&A and growth, and moved into doing integration work with acquisitions, kind of learning how to operate businesses. Fortunate that one of those businesses was the mortgage business. We had a company called GE Capital Mortgage Services, Inc. many moons ago that was sold to Wells Fargo. So I worked on that, then left there and went to Sendit, which was Sendit Mortgage, which was what PHH was named after it was originally PHH. And then I ended up working at Sendit in a division that was doing title insurance and title insurance underwriting. And then we ultimately had a division that did all the affiliated businesses for real estate. So I spent a lot of time in M&A rolling up title businesses and mortgage businesses and then operating a lot of those businesses. Gotcha. So ran strategy and growth at that organization for a bit. And then along the way, Glenn Messina, who's the CEO at Onity Group, is someone I worked with at GE many, many moons ago. And while I was transitioning myself into a new role, doing some advisory work for private equity and others, Glenn asked me to do a project for them. Did that project and ultimately asked me to join the company, and I'm very happy I did.
Good. So you mentioned no one talks at Career Day about mortgage. But the thing I hear so often from people in the industry is once you get in, you never leave. Right?
Yeah, there's a little bit of that. Absolutely.
Probably. So, I feel as though it's very godfathery.
Absolutely.
You know?
Yeah, there's a bit of that, right? There's the network.
So why is that, do you think? Like, what do you love about being in this industry, and why are you so glad to be at Onity now?
Well, I think it's a pretty unique industry in the fact that we can provide homeownership for people, right? And when you think about things that you do like in life, I mean, I like houses. Like houses is kind of my thing. I remember taking architectural drafting in high school because I liked houses. I thought I'd maybe become an architect at one point. And I just like houses. So the fact that we finance houses is a pretty interesting thing to me. Also, you get your kind of HGTV, kind of eye candy thing going on. But the fact that you're supporting home ownership, I think, is a very valuable thing. And it feels like it's a positive thing for the market. Now, is everyone an owner? Probably not, right? We've seen those issues rise in the economy before. But the fact that we can help in our platform be a B2B offering for our partner clients, because we are not in the direct-to-consumer business. We don't have retail branches. We do direct-to-consumer recapture work in our portfolio for several of our clients, but we enable others on our platform. So we're a B2B platform to build brand value back to our clients, whether that be correspondent lending or in our servicing business.
So tell us a little bit more. We started with kind of like Onity, PHH. What is the structure there?
Sure. So in 2024, we renamed the corporate entity Onity. And that was really purposeful because it really stands for, if you look at our stock ticker, it's on it. So it's kind of back to our mantra of we're on it. We're going to be relentlessly focused on customers and relentlessly focused on good experiences. So we're on it. And it's a multi-year kind of cross-functional effort that goes behind that effort of changing the name. So it's more than just a name change. It's more than just reskinning something. So you may remember it was Aquin and PHH came together, and the company has really transformed itself pretty dramatically in the last 4 or 5 year period. We just came out of the fourth quarter with record earnings for both the quarter and the year, which is very impressive. And we've had consecutive positive earnings for, I don't know the exact number, but I think it's 14 or 15 quarters in a row, which if you look back at what we've all gone through in that time period, some tumultuous times. So it really showed that our platform is able to build value for clients and their customers in good times, bad times, or moderate times. Because you look at these market we've been in, I mean, flat is kind of like the new up. And I think you could accept the fact that flat's not a bad thing sometimes because of what we've all seen relative to how much the market has changed.
Right, right. What has contributed to that positive growth?
So I think it starts at the top. That mantra of On It is real. It's not some fake thing. And I think, Glenn, from the top down and bottom up, we have accountability in our structure and a relentless focus on results. So we're very metrics driven. Everything is measured. So that which is measured is real. If you look at servicing is a factory type approach to things. Sometimes the customer can get lost if it's not done right. So for instance, we measure NPS, a ruthless measurement, right? Net Promoter Score. You basically get your promoters, and then you have your detractors, and you basically have the people in the middle don't count. So you can have a negative NPS score, and we're very proud of the fact that this past year we just had a 68 NPS in our client surveys, which is on par with Ritz-Carlton. It's on par with, it's better than Chick-fil-A, which is,
That's amazing.
Chick-fil-A is a 57, but it took us a long time to get there. It was us investing in people, processes, and technology in order to achieve that. So it's that relentless focus and never giving up on the fact that you have a longer-term goal to get to the other side, because while the market changes, your reaction to market changes doesn't need to be a distraction on where you're trying to go. You can't kind of chase every car that comes down the street. You'll get exhausted and you won't get to where you need to get to. So it's been beneficial. The company's done a lot across the org, whether that be originations, servicing, capital markets, the support functions. Everyone's kind of arm in arm from an enterprise perspective focused on those things. And, everyone in the company is incented and held accountable. And that's a refreshing thing, because there are some, we're in Texas, so there's some cowboys and cowgirls out there in this industry that, are a little more fast and loose, and that's not us, because we're trying to build value for our clients that are on our platform, whether that be originations or servicing or both. So we're really proud of what we've been able to achieve.
Sounds like you should be. But I really do have to ask. Chick-fil-A always says it's our pleasure to serve you. Is there anything that you guys have kind of as your other than On It?
Well, I think that if you look at who we are, that relentless focus on customers, we do really end a lot of our things with better together, because we do believe that relentless focus on the customer, the client, and then their customers, because we're an extension of them, and a lot of the things that we do really does make for a better experience for them and for us. So we're kind of in it with them. We're not just buying loans. We're helping them obviously get liquidity. We're not just servicing loans. We're helping those customer experiences get better so that they get that brand halo to be larger. And I think that's lost on a lot of people, especially when you look at servicing and the pressure on consolidation that's in the market, everyone looking at price. It's more than price. There's experiences that are occurring every day with that customer. And we want to be there for them when they purchase a home, when they refinance a home, when we're just servicing their loan, when they may have a hardship from a loss mitigation perspective or a default perspective. What are their options? You have to be compassionate in this process. Long gone are the days of, deadbeat borrowers. That's not how the world works anymore, right? We're here to do the right thing for the right people and do it effectively and efficiently, while also caring for the customer and the client and their customers.
What does a KPI look like for caring for the customer?
So
especially if you're being flexible with where they are.
Sure. So we do look at NPS across the business, but what we also look at is every interaction that we have with the client in the kind of waterfall of they came in, they asked these questions. We have voice analytics in our contact center. We measure where things are pooling, meaning someone called and they didn't get the right answer the first time. How do we fix that? We've built enough self-serving options in the platform that now about 90% of our interactions are digital self-serving options. And that's not because we thought we had a good idea. Some of them are we thought we had a good idea. A lot of them, though, we're just listening to the customer and meeting where they want to be met. Mm-hmm. So there's KPIs and there's metrics in that entire waterfall of our omni-channel platform. We just added text messaging not that long ago for clients because we listened to that and customers wanted to text more. We have a proprietary platform in our loss mitigation side of the business where you're in a bad place. You have things you need to talk about, whether it be a medical bankruptcy or a hardship, you lost your job. This is uncharted territory for a lot of people. The economy has different pockets of change, zip code by zip code. How do we care for that person properly? One of our proprietary tools on that side of the business allows us to make rate party contact numbers that are far in excess of others in the industry because we're able to one-on-one connect that person with the same person is how the technology works. So about 90% of the time, they're always talking to the same person through that hardship journey.
That's incredible.
And that's something that's been here well before I got here, but it's been something we've really emphasized a lot. It's also why we win awards from Fannie and Freddie on a pretty consistent basis, because a lot of that's about getting loans to perform again. You don't want that person to go down the waterfall and go 60 plus, 90 plus, and then obviously we all know how it ends, and we don't want that to happen. So we'll work with them as best we can with the options available to them. And we're also using technology in that side of the business to go through the rules, the regs, and the optionality that's available to those people. What are those programs? You don't want someone to rely on just what they think is available. You want to show all the options. And I think that's one thing where we've leveraged AI quite a bit. It's really kind of summarizing things so the agent is ready when the agent takes that call. Because even with that 90-10, that's performing in non-performing loans. So you want to talk to the customer when the loan's not performing. But if they don't want to talk to you and they just want to fill out the forms, we have those options too. But our numbers are much higher on the non-performing side. That's just a blend.
Gotcha. So. Well, I love that you said that you provide them their options, because so often when folks are in this situation, right, it's their first rodeo. They've never been there before. They're in the
We're going to keep going with these Texas references. So.
Maybe. And I moved here for a reason. But they're in a state of stress, right?
Absolutely.
And they don't know what their options are. They don't know that there are options, right? So to give them that moment where you can say, look, we have solutions. We have more than one solution for you to choose from. Let's talk through them. You know, that's huge for those people in that situation.
That's the tip of the spear, right? Those are the people. You can sit here and take payments and have people that are self-serving and they sign up for ACH, but when they need you in their journey, that's when you need to be there for them. So back to what are those life-changing events that are occurring? You want to purchase a new home, we can help you. You know, you want to refinance that home, we can help you. We have programs where we leverage our analytics and our propensity models to look at loss mitigation, but also refinance opportunities, and we actually share that data set in some of our recapture offerings with our retail clients. So if sending that back to the loan officer directly saying, we modeled this out, we believe these are people you should be talking to now.
Oh, wow.
So something we do with our own portfolio, because we're an asset owner ourselves, we're able to extend that analytics and layer it over top of our overall portfolio to help them through the process as well. And build their brand.
A lot of people say they're data focused, but I can tell every single answer you've had includes, here are the metrics, here's the way we use the data, here's how it's implemented, here's the process. That's really cool.
So we do have a relentless focus. It starts at the top, and every month we review our business, all our channels, top to bottom. There's daily metrics. Everyone's measured. Everyone's rewarded when they do well and put back in line when they're not.
So speaking of innovations in how you support your clients and their clients, tell us about the most recent additions to, I love this, LASSI.
Yes, that's it.
I love it.
Yeah, LASSI stands for our Loan Span AI. So you got L and the S and the AI for LASSI, and it's an information retriever. I think it's a great example of failing forward and innovating in an agile way. We launched the original LASSI minimum viable product last year at the servicing conference. Just so happens to be that time of year again. But we've been adding to LASSI as we go. So LoanSpan is our proprietary data and analytics platform, like you mentioned. We're very focused on data analytics. We're also focused on transparency. One of our mantras is partnership through transparency. We want our clients to see what we're doing with their portfolio whenever they want. 24/7, 365. So LoanSpan is that data and analytics platform, policies, procedures, webinars, all that information. Last year we launched LASSI with its ability just to look at those items, the policies, procedures, and the like, to get it out to market. And then we've since added loan level inquiry, was middle of this past year, and that you can ask LASSI, what's the escrow balance of a particular loan? And this is very helpful because there's a lot of go-between items that happen where the client calls the mortgage company then has to find that information and get it back to them because it's not readily available. So while you have data and analytics, you also have a ton of data and analytics. So how do I get the specific information I need now? And that's what LASSI really helps to do. So it's sitting on top of and retrieving information just for your portfolio. It's not going to get lost in someone else's yard.
Right.
It's in your yard,
siloed.
Contained and siloed off. But we just launched call recording retrieval, which is very big for us. And I think it's big for the industry because it's full transparency. So if you feel you had an issue or a client calls that's upset with how something was handled, you as the overseer of us, our partner, in this partnership through transparency, you can pull that directly on your own. No go-between, no soft shoeing around, oh, you need some call recordings to look at? Let me put the list together for you. No, you pick whichever calls you would like to pick, which we think is very powerful. Mm-hmm. We have some other things planned for Lassie as well. We'll continue to add. We have a relentless focus on constant improvement. So with those metrics comes that kind of mantra of, how do I get to 5 nines? How do I get to the 6 Sigma type environment?
Right.
So we're constantly looking to improve. We listen to what customers wanted, and it's been fun. It's been fun to leverage it. Now, also, everything's not AI, right? Lassie is AI.
Right.
There's a lot of AI washing in the marketplace. We have over 200 automations on our platform. Many of those are RPA type items. We also have a document ingestion platform.
Spell out RPA for us, just in case people don't know what that means.
Sure. Robotic process automation.
Okay.
So those are things that, A to B, B to C. While Lassie is an AI engine, those things aren't AI engines, nor does everything need to be an AI engine, right? And with RPA, we've got about 85,000 man hours a month that don't have to be people.
Very nice.
But that means you can have people focus on higher level tasks. It's not just about cost takeout. It's about the better people handling the exceptions or handling the items that really matter, because a lot of times we live and die by exceptions. So what's your happy path? Also, the ability to make things more consistent and not have the human error in it is a valuable thing. And again, back to 90% of our interactions with customers are self-serving. That's another technology push for us. Do we want that number to be 0? No. We want to talk to customers. But if you don't want to talk to us, we understand.
Right.
And I think one of the things we've been living by a lot with NPS and how we measure ourselves is, while our industry may be flat, down, up, the consumer experience is changing across all verticals. And people are starting to get less and less patient, and people are starting to want to self-serve more. We've obviously seen a generational shift in homeownership. We'll continue to see that. But can I meet customers where they want to be met?
Right.
And I think we'll continue to see the arms race, really, around experience sets. And what's that experience set look like? Oh, I can do this on Grubhub. I can do this on Uber. Why can't I do this with my mortgage company? And that's why NPS is good, because it's cross-industry as well, and a really strong metric.
Mm-hmm. I can personally attest, as someone who has dealt with escrow questions and like the transparency there of, as the client being like, hold on. Why do you need $1,500 today? What happened with my escrow? And then trying to parse that, right? It becomes a really big pain point unless it's done well, and then it becomes a really good, what's the word I'm looking for? Like, just that NPS of, I love this. This was easy.
Sure.
Easy peasy. The other thing I would say is, like, I 100% like to talk to people on the phone because I'm a relational human, So being able to do that, but also my husband never talks to people on the phone. He wants to find it online, and if it has to be a phone call, I'm doing it, right? So having that ability to meet people where they want to be met. Sure,
everybody's different.
Yes.
Right? So good example is what you mentioned about escrow, right? So it gets confusing, right? What happened? And you're probably aware that in the market, T&I in certain markets is starting to outpace the P&I, especially for the low coupon books that were done during 2020 and 2021. So people are like, why is this up? So first of all, keep in mind, they're calling us. So that could be an asset we own or an asset owned by our customer. They're not happy because insurance has gone up almost everywhere in the country, given all the wildfires and natural disasters we've seen. And then taxing authorities raise taxes. There's also less homes being sold, less stamp taxes. So those are two things that are out of our control. So we have to educate the borrower on a situation they're now in. And one of the things we have is we have custom escrow videos that go out to everyone on our platform when those things occur, and they explain, you're down, you're even. It walks you through specifically your property.
Oh, cool.
And talks about what your situation is, because everyone is unique, right? And everyone's situation is different. So we think that's a pretty powerful item. It's not free, right? We use a vendor to do that. but we partnered with them, and it works great, and we get great feedback. Again, it's all the things that add up that kind of go in the sauce. It's not just one ingredient that makes for that better experience.
Right.
But to your point, my mom is, late 70s. During the pandemic, Instacart, she used Instacart. So people are starting to use digital solutions across all age brackets. I know there was a McKinsey study talking about how we were stuck before the pandemic really on global digital adoption, and it jumped through the roof, and it's not coming back. So, regardless of the fact that we were all cloistered in our homes, a lot of things changed.
Mm-hmm. It's true. How do you decide what is your next project? You mentioned earlier that it really comes down to client feedback, but how do you, again, parse what you're hearing from folks and what you want to go do next for them?
Sure. So you can't do everything, right? We're all limited in time and money. And money's people too, right? Because people cost money to get things done. Mm-hmm. So we have our ideas of the market. We have our ideas of what we want to do, and then we tend to run those by our clients. We also do client surveys and feedback loops. We take that data, analyze that data, see where the Venn diagram works. And then we have always going to have every once in a while something that we really believe in that we're going to kind of do and see if people get there, move the market type items. But it's a pretty rigorous process across all of our constituents inside the company. So we've got originations, we've got servicing, we've got capital markets, and obviously we have our technology and support function group. So everyone's involved in that process. We also reevaluate that process time to time to make sure things are working. And again, we measure it. We make sure it's working and it's contributing. But you're also adding to that sauce every time you're doing it.
Right.
But we still have our kind of core items that we always stick to. Back to a reaction doesn't need to be a distraction when it comes to things in the market and things changing. So you got to stick to your path.
Right.
And we've done a good job at that with the company's transformation. Excited about the rebrand. Next month, hopefully we'll be talking about how we're renaming PHH Mortgage to Onity Mortgage. And we're very excited about that. We're in that process, and we'll have some more things to talk to you about there. And
we'll just have to have you come back.
Sounds great.
I would love that. So how do you balance? I'm thinking through everything you said in your head, and you have the innovations, and then you have the operations. And I'm assuming your operations have iterations, right? We tried this thing. We think we can refine it. We think we can do it better, while you're also moving forward with new things. How do you balance all of that?
Sure. So obviously it's a portfolio effect, right? But operational superiority is one of our big items. So is that innovation going to contribute to a better customer experience or better operational efficiency? But you also have to look at the word effectiveness, right? So there's a big difference between efficiency and effectiveness. Efficiency is about money. It's about numbers. Effective is, did it get the right result? So you may want to spend more to get a better outcome for the customer. So it's not all about cost containment. So a lot of things in servicing is, can I make this more effective, more efficient, really, not effective? But the consumer experience is really about effectiveness. So we balance those out. Obviously, once you build something, there's then care and feeding, right? So you've got 200 automations. Well, a year ago it wasn't 200. I think it was like 180. And then you have to keep refining and care and feeding those items to make sure they work.
But they haven't broken.
And they haven't broken, and they're consistently yielding the proper results. And one of the things that we didn't really talk about, but one of the things that guides us and puts us together is, while we're not a bank, we were a bank in the past. So we actually still follow an OCC 3 lines of defense model. Line 1 is heavy in our operations. We have a big ownership set in the operation in line 1. Then line 2 obviously is critical challenge. Line 3 is audit. But a lot of places kind of wrap themselves in the blanket of, oh, we're a bank. We have 3 lines of defense. We have 3 lines of defense that work. And those people are really, but there are people that understand the business in line 1 that own the outcomes. So if one of those automations has an issue, or if there's something else they believe can be a tighter drum for better outcomes, they can raise their hand and work through that. So each organization, cap markets, originations, as well as servicing, all get a seat at the table. And we have a pretty open, cross-collaborative group on the senior leadership team, which is fun. It's refreshing. And it kind of does remind me of when I was on the national rowing team, and I was, collegiate athlete, And that's kind of teamwork, right? It matters. You're only as strong as your weakest link, and that might sound like a hokey little thing, but I remember saying to Glenn, being at the company a few months, saying, I'm really happy that everyone works. Everyone in the senior team works. And we're all kind of in it together, which is great. So we're all on it. It's not just some of us. So
right. And the collaborative piece too, right? For everything that you were doing, you could all be on it, but be siloed.
Sure.
And not be as effective.
Absolutely.
Or efficient.
Yeah.
Right? So
absolutely. My peer set, I can pick up, on my way here, I just picked the phone up and talked to two of my peers about things that need to be resolved in a short period of time, and they're on them. They're on it while I'm here talking to you.
Well, so you're on it here.
I'm on it here.
At MP Access.
I'm on it. Absolutely.
What have we not talked about that you think is really key in terms of strategic growth and operational excellence, or just kind of where you guys are headed?
Well, look, I think we didn't really talk about the market and the consolidation we've seen in the market. I think that if you look at us and that operational superiority, I think we're very well positioned. We've been growing, and we continue to grow, even with the kind of different market conditions we've seen in the last 4 or 5 years. The company has consistently yielded results. And when you look at how we are from a cost perspective, cost isn't everything, but cost and experience both matter. So again, there's NPS scores, how we're dealing with borrowers. NPS scores are high, right? Off the charts. They didn't get there by accident. They can slide backwards. We don't want to rest on our laurels, right? But with that operational superiority, we're yielding costs in the performing side, and we're yielding costs in the non-performing side that are well below industry benchmarks when we look at MBA surveys and where we stand. So we believe we can compete in this market on behalf of our clients to build better results for them, regardless of size and scale. Now, we're still big. There's people that are bigger than us, but we can also pay a little bit more attention and still yield better outcomes for them as we grow.
Mm-hmm. Mm-hmm. And you coming from kind of the M&A background, when you see the consolidation in the market, what are the kinds of catalysts that you see for that, but also direction that we're going as an industry?
Sure. So, it's consolidation for scale when you really think about it. If you look at the origination side, this is my opinion, right? If you look at the origination side, you've got a lot of people that are now realizing the costs of technology to operate an origination platform to compete against some of the bigger players like the Rockets of the world is harder, right? So you've seen a lot of people on that side of the business either walk their loan officers across the street or sell their platforms because they were realizing that they couldn't compete as effective as they could before. And you're seeing on the servicing side that scale matters. And we're just seeing, headline after headline. Rocket Cooper is just one of many. We've probably seen since 23, 10 or more movements in the market. In the last few years, it's been about 4 or 5. And they're all big splashes. But with that comes opportunity, right? Because for us, someone may have been with their sub-servicer, let's say, for 10 years. And now they have to do a servicing transfer. Or there's an integration that's pending. And they say, well, I should look at my options. And that's good for us. And we like to having those conversations. And we look forward to having a lot of them this week.
Excellent. Yeah, it's true. You can either look at it in terms of, oh no, the sky is falling, the world is changing, or hello, opportunity. How are you?
So I am on the board of the Rowing Association, Northeastern University Rowing Association, Alumni Rowing Association. So I do help support the team. As many people know about NIL and college sports and how that's all changing, I think what people don't realize is that there was a big class action lawsuit with the NCAA that has really hurt a lot of universities. So if you're a former athlete or you're proud of your university, I would give back because there's a big hole from that settlement from prior periods. So somebody was in Madden 10 years ago, they're going to get a check. And the NCAA is going to give less money to a Division II school or Division I school's non-revenue sports. So I think we need athletes in this world because they're structured, they show up, they know how to work as a team. I think it's a fiber to our society that we have people like that out there. So that's one thing I do. I have a beach place. I like to travel. My wife is in this industry. She's in warehouse lending.
Oh, wow.
So we have a lot of great conversations at night about work and mortgages and fun stuff like that. So, but I do like going to the beach and walking, not laying on the beach. I can't sit still often, but like being active.
Mm-hmm. So, well, we appreciate you very much. This was a great conversation. Thank you.
Thank you. Thanks for having us.
Yeah, of course.
Look forward to doing it again sometime.
Would love that. Would love to hear where you're going and how it's been going and all of that, because this has been fantastic. So thank you.
No, thank you very much for the opportunity. Really appreciate it.
For sure. Thank you for joining us. I know that you got some really great takeaways on strategic growth in terms of effectiveness and efficiencies and how to think about your Net Promoter Score and really grow in a intentional way. So thanks for joining us today, and we'll see you next week.